DJ here from PTA. Pretty mixed day today as far as the market goes. I placed about 3 trades today. 2 winners, 1 loser. I'm going to go over those. I'm also going to go over a few other ones that I didn't play that was, pretty decent runners. One I'm kind of really pissed on. We're going to go over that one too, Vtnr. That was one that I definitely should have took advantage of, especially with me winning money on it on last week. So I'm going to go over my loser first, which was Agri. What was interesting about this one is I knew it was going to go, but I actually got in it kind of late. So I got in it actually a little too early, got out of it. I respected my risk. I had a really tight stop on it because of the ATR. So I didn't want to put myself in a situation where this stock could pull back on me or anything like that. So basically, it gapped up for the day. It didn't really have news. I think it was just really a gap move and people were looking at it. So it had a lot of volume. I think it was more crowded than anything. You're talking about 95 million in volume with a 15 million float. I just think the stock was just really crowded. So let me kind of break down that trade for you guys. Looking into this, we'll go down to the hour. What I had noticed coming that they had, made this high for the pre-market, what I started to notice was this pullback and then this hold. It ramped up, pulled back, ramped up, pulled back, and it was kind of like everybody was just kind of sitting. Like no one wanted to really release shares. It got kind of sticky. I just noticed it just wasn't moving like a normal stock would. It kind of just went in my opinion, sideways for the most part. Because, it kept going higher, making higher, and I knew it would squeeze. But I just, the way the market's been and all that, you got to respect your loss, respect your risk so that you don't blow up your account. This is that time of the year where if you're not careful, you can really take substantial losses that you don't need to take. So for this one in particular, the way I was trying to play it was basically I was getting in at 242, 243. So I got filled in at 242. And I'm going to pinpoint the time for you guys. It was right here actually in this candle. I can look at that and tell just by the tape. No, actually it was a little bit earlier. So it was around 10:20 something. So I got in it. Let's see something here. Right here. So what happened, I saw, which after I looked at the trade, I didn't really like the 15 minute. It hadn't held and it hadn't pulled back significantly enough off the 15. This was a nice pullback, but this wasn't enough. It needed this right here. So I should have waited. So I ended up getting in the trade here, and I think I ended up getting out right here. Yeah. So it was a small loss. About right there is where I got out. And my theory was that, and let me I like to make sure the colors are right so you can understand. Right here is my stop loss. Right here was my entry. So my theory was I'll get in here, it'll pull back, set another swing low about right here, and then take off. So it actually needed to pull back some more. Once I go back and reviewed it, we go back to the 15, it didn't really pull back as much as I would like on that 15. So when it pulled back, essentially it only had pulled back just a little bit before it tried to take up. I needed a full pullback on it to hit a significant area of a swing low before I entered the trade. So the ideal way I should have played this trade was being a little bit more patient and actually allowing it to manifest. So instead of getting in right here, I should have let it pull back and got in here, which is right around where my stop loss at, because you can see it then ripped higher, went back up to 266. And then there was another entry right here. So I knew for the most part that, once I saw the trade, I was like, oh, this thing's going to move, but I'm not going to be here to see it. I'm going to end up not being on the desk or something. I kind of saw that coming. So right here being the wedge or whatnot was really where I should have played it. I should have waited, but wish I should have, could have, whatever. But you learn from the trade. The key to trading though is minimizing the risk, minimizing your stop losses and stuff like that, making sure you get in and out, respecting your risk is really the thing. Because even if I had got out here, came back, saw it, could have played it again right here, made my money back here, but by that time I was already up in 2 other trades, so I kind of just left it alone. And then it ended up rallying to 305 anyway. So theory was correct, timing was off. The next trade was DTS. This was one of my winners. It gapped up in the morning. Honestly, I played it based off of price action. It wasn't really a lot of data on it. I mean, it was some stuff about the CEO and stuff like that. But this one kind of played out just like AGRI did. The only thing was it never rebounded. So unfortunately, a lot of people got chopped up out of it. But for me, I kind of saw it happening. So I had already been acutely aware of the other trades. So I was like, I think I'm going to get out. So what happened is I got in about 950 right after the turn. You remember, guys, I like that 945 twist, or reversal, I should say. And a lot of times you get it, and then it just doesn't play out. It just does not move the way you thought it would. So this was the entry right here. So let's zoom in here. And what you can see is that when I got in, it did this nice little wick down move, shot up, and then it kept doing this sideways, and then it shot up again. When it shot up again and couldn't get over this hump, I got out. I just said, you know what, let me just cut my losses. So I ended up getting out with a small gain, about a 10-cent gain, nothing crazy. But, from the previous trade, I was like, I don't know about this. I got to figure this out. And, ultimately it went sideways. So that was a small winner. Nothing really fancy. It was about 10 cents, 6-8 cents, somewhere around there. Small winner. Nothing really other than it just wasn't holding. And if you look at the higher time frames, it just kind of went sideways for the rest of the day. So will this be on watch over the next couple of days? Yes, with a 6.6 million float and 68 million in volume today. Yeah, this stock is definitely going to be something that I'm paying attention to and watching, because if you just look at this chart, that's more volume this chart has ever had over the last 12 months. So from 2021, this is the biggest volume day. So something's going on, something someone knows, and ultimately, you got to be where the action is. So is this something to look at in the next couple of days? Absolutely. This is something you want to keep on the radar. Watch the price action. I mean, needless to say, it might gap in the morning. It might even take off tomorrow. But whatever the case may be, you definitely need to be there looking at it. The next trade This is the one I miss. Vtnr. Now Vtnr ended out the day mixed, but it was coming off of massive volume from the previous day, and you see that it's still volume every day. So one of the things that I missed on this, it just kind of just fell off the radar because I was looking at so much other stuff, was when it opened up this morning and slammed very hard. So when it opened up and slammed, I sort of just looked at it and say it's probably going to go. It's probably going to retrace and go back up and then fall again. I just don't think it was going to hold. So I kind of took it off the radar. So my biggest thing was that, you know, once I started seeing it reverse, some people in the chat, you know, came out and said, hey, you know, it's reversing. And by this time I'm, you know, doing some other trades or doing something else. I just said, you know what, I'm going to let that one go. Now, that's one I did. I wish I didn't let go because it was just a great pattern. I mean, we had literally, let's go back to the hour. So you had a nice leg up, pull back, great buying pressure there. Then you had a pull up, pull back, great buying pressure here. And this is how they psyched everyone out. This is how they sucked everybody in. It was in between that 9 and 10 o'clock hour. So to zoom it back down, you look at this 15 minute, it kind of really makes that picture look perfect. So you had buyers stepped in pre-market, pulled it up. The buyer stepped in again right around the same area. So when I saw that, I said, oh wow, this thing's going to take off. And that's when it started to move. So it already made its fall and then it's bounced, and it kind of just bounced straight up. Now you had a lot of traders probably played it off of here, knowing that, you know, it was in a little pattern there with the flag, and then they took off. But most of the traders that get in off of support, they got it in right here. So looking at it on the 1 minute really gives you a different picture too. So you had this massive drop, bounce drop. Now this is an abnormal swing. When a stock swings up like this, usually pulls and then continue on. And you can look at the monstrous amount of size in just these 3 candles, let you know how many people, just like here, thought that this stock was going to go lower, and then it bounced. And when it rebound like this and hit right here, this is the perfect trade, because this is where you get in at, about right there. And then you risk to here. So you're talking about 20-cent risk from the support. And literally $1.68 gain. So, you know, even if you got $1.40, you know what I'm saying, you still looking at a 7-to-1. That's a solid trade. That's when you load up here with this amount of risk, pull back out here. That's a phenomenal trade. That's one that I missed, and that's why I said I was a little agitated about that one, because it's like, oh, it was supposed to have been on your radar. You should have been looking at it, but you can't catch them all. The next one that was yelled out in the chat, which did very well as well, was Sava, S-A-V-A. Anybody that trade stocks know about Sava, knows about that particular trade, knows that Sava got legs, it can move. Going into today, gotta look at the pattern. So we already had our full bounce on the low, bounce up, swing, then they pulled it back. Now this is where it gets kind of tricky first thing in the morning, because you didn't really have any volume, and then it yanked up and then pulled back, then it yanked up and then take off. So the proper way to trade this is you want to let it get its first leg with some volume. So it didn't get its first leg with some volume to here. So the ideal trade, or the ideal way of trading it, would have been, okay, look at the 15 minute, see that it's holding, drop back down to the 5, Wait till you see a significant red candle, which was here, and then you would have looked at the 1 minute to find your entry. So ultimately, the entry was somewhere around here, about 1980s, 1986, 1985. Now some people played it off the 200, which is fine. Could have played it somewhere right here, but you could tell by the price action that everything was kind of sketchy. You wanted to build. It didn't build to about right here. 1991, jump in. Literally, you would have had, let's say if you got in 1991, you probably would have had 28, 30-cent risk, which is within line. $2.57 gain. So let's just say, I don't know, you got $2 of it. You had 25-cent risk, so it was an 8-to-1 move. Those are the type of moves you're looking for when it goes out and it stretches. And I mean, this is just classic price action. It wasn't nothing fancy or anything like that. Got you a clean $2 on that move on Sava, SAVA. Another one that popped up on the scanner late in the day was BBIG. I didn't play it. I simply just kind of watched it, but I didn't really like the prices. But it did move. It did do a nice little move up. Again, I just didn't like the pricing. I didn't like the sketchiness. And you can look at the bars and see there just wasn't a lot of volume in it. But there were some people who made a good play off of it. Not my type of trade. That's more of a, buy and hold if you're going to swing it type of thing. But I just didn't like the trade at all. Now, my big winner was VERU. Now, VERU was on watch because of the move it did on Friday. So let's go back to that move and show you how to set up for the next day move. And this is the thing, understanding the move, understanding why it's moving, and what the volume take and everything is coming in at. That's how you play the trade to be sufficient. Now it popped up, hit this 15-15 area on Friday. So going into the trade, let's go down to the hour. Friday you had Thursday you had this massive move to the upside. So it bounced, found its low, and then it bounced all the way up, back up to 15, and then it fell. But when it fell, you can see where the stock, ultimately was being rejected. So I'm always looking at these key areas as parts of rejection. So when you get this massive pull down, rejection, pull back up, pull down, rejection, pull up, pull down, rejection. So you got the same area being rejected multiple times. So I kind of visually look at this and say, wow, okay, right there 1250 must be holding, right? So you looking at let's see something here. So you're looking at that as the area being held. Every time it wicked below there, it sucked it right back up. 1250. So that was kind of like the line in the sand for me when I was looking at this trade. So ultimately, I knew we had a nice little pullback first thing in the morning. To break it down, let's go to the 5 minute. And in the 5 minute is where it got interesting, because first thing in the morning it shot up and did this whole pullback. I wanted to come back down to this 1250 area and then end up doing it, which gave me a really nice entry because I was literally risking off of that area. I end up pulling in, and let's pull this down to a smaller time frame, to the 1 minute, is where you can really see the action. So as you can see, it hit here, rip back above, and then it actually started holding pre-market. So they had to come back and retest it. So the first time they retested, they swung it up really fast. That part I missed. I wasn't even there when it happened. When it came back and it retested this area, that's when it was like, oh, okay, you got some legs. So once it pulled back and then look at the price action, it was kind of like indecisive. Shorts came in really hard after we had this pullback. So let me discuss that for you and like psychologically what's going on and how I viewed it. Ultimately, you had this rejection. So this rejection happened. Now remember, it rejected multiple times. So in the past, it rejected maybe 3 times. So when it hit there and then bounced up, you figure this was a quick leg up. I like to see it form. And what I mean by that is that this section here, okay, this section here is not a form. This is just dip down, dip up, right? So that's not someone stepping in. That's like someone hitting the panic button. So I look at this as like a panic move. And that's the reason why I didn't enter. Man, I wasn't there to enter. So I didn't get a setup. So what I mean by the setup is I didn't see someone step in. So what does that look like? Well, let's go back to this section. So from here to here, this is a setup. So what was the setup? You had a drop off, bounce, pull back up, come up, curve, and then reach out. So that's your pattern. So you had your A, your B, and then the C pull off. Or some people look at it as, okay, it pulled down, went back up, pulled up, and then went back like that. So this could have been B, this could have been A, and in this section here, that curve we talked about before is C. So when you look at this chart, that's exactly what you got. So you had this quick ramp down on these 3 candles. Now, when you have 3 candles after consolidation, so let's talk about that. You had 1, 2, 3, 4 consolidation. 1, 2, 3. It lost gas. So when you have a big ramp down with a bunch of volume, then you have pretty much flatline volume. Then you have a spike up and it couldn't get below the support. There tends to be a reversal. So how did the reversal look? Well, if you look at the chart, this candle here was the igniting candle to change the shift of the stock. So you have to wait for it to confirm. The confirmation happened here. So you got to think low. This is support. Here, let me write that again. Just put S for support. So you had your support here, igniting candle, pullback, another candle showing that we got some strength on the buy side. Set a higher low, swing low, and then it did it again. So when I saw that, I said, oh, I got to get in. So my order was set for $12.92. So let's go back to the chart. I think I wanted $12.81, but the price ended up ripping above that, and it was some big sale orders, or big orders in the 12.90s. So I jumped in at $12.92. Okay, so $12.92. $12.92 entry here, right? So I'm looking for $12.92 entry. I'm willing to risk. I mean, definitively hard risk was here. 42 cents. I ended up risking here, which was 22.20 cents into the break. Now, why am I confident in that trade? Well, let's break that down. This trade is very confident, or a high probability trade, for one reason alone. It's because of the pattern. Remember, this portion here was no pattern. Okay, this portion here, after the sideways price action, bounce, come back up, bounce, 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 and then rip. That is called a pattern. It was making higher swing lows each time. So that lets me know that somebody or something is protecting it. So when I saw that, again, my order entry was here, and my stop loss was here. All right, so let's go here. I'm gonna leave this one turquoise so you don't get it mixed up with the other line, and then this one I'm gonna make red. This shows support, or stop loss. So this is my stop loss, this is my entry. Field 1292. Now, what I always do, like I said, is take off. So when it went and ramped here, that hit an area, took some off. It pulled back, went here, took some more off. Then it went here, took some more off. And then when it got overextended here, and I'm talking about the next area was 1446. This is where I took off majority on my share. So what I always do is kind of, you know, play it out and let the stock kind of form. So right there was where I took off majority of my shares. When it pulled up, I immediately took off, came back, I took some more off, and I started to see the pattern change. So you remember, guys, I told you about pushes. So I look for the push. When I get into a trade and I'm looking at a stock and I'm looking for that push, I go here and I look at where's the next top. So this is full extension. That's 83 cents. That was almost $1 just from where I was at once it hit full extension. Once it hit full extension, I take something off. Now I might take a couple things off throughout the way depending on my size. This one I was sizing it pretty heavy. So ultimately I took off some here, but because of how it was trading, it didn't really give me a significant pullback. It just kept creating higher swing lows. So what are those? So we look at the trade fully. This was a higher swing low. This was a higher swing low. This was a higher swing low. When you talk about higher swing lows, it's always collective towards the previous one. Higher swing low, support. So when it's doing that, that just lets you know that it's going up. It's people taking profit, and then it kept going up. Now, if you look at it from a higher time frame, it looks a little bit different, which is what keeps you in the trade. So ultimately, it still was making higher lows on the 5-minute. It wasn't until it hit this area and then it pulled back really hard that I started to see it look different. Now let's discuss that in a smaller time frame. Back to our drawing. When it pulled up and hit this area, this was like, I think it was like a 161 extension. So when it hit that extension, I mean, that's full length. I mean, I'm in at 1292, 1446. I mean, that's not a shabby gain. You know what I'm saying? When you got, 4,000 shares or something like that on the stock. So when you look at a stock like that, that's a $1.56, $1.50 gain. And it hit the whole extension. And then I also pay attention to the movement. Now, you can tell that everybody pretty much was sitting right here. Why? Well, let's think about it. The previous trade, everybody was sitting here, the shorts. And remember, as I told you on the previous videos, make sure you watch those because it all ties in and you can start formulating the strategy that I'm using. This has stop losses every 10, just like this one did. So when the buyer stepped in here, they pushed it out. Those people doubled up, which pushed the stock back down. They consolidated it, sideways price action, to push it back down into support. Remember, it didn't hit support here. It made closer to the support, which was the given support line from the previous day. So a lot of times when you're trading, it's always looking to the left, as some traders would say. The reason being is because when you look to the left and you begin to see certain areas, what happens is when you go back to these higher time frames, these areas start to respect itself or respect. So remember, the area was 1250. We identified as the key area is 1250. Why? It sucked back up, sucked back up, sucked back up, sucked back up, sucked back up. So in pre-market, it pretty much told you I can't get below 1250 for some reason. I just can't. Went back up. They tried to retest it here, which was, and this is why you got to use multiple time frames. That was this area right here. So if we go back and look at it from the lower time frame standpoint, you can see it reject, it held. So you got 1, 2, 3, 4 areas, 5 basically, that it held 1250. So that's a key area. This is the reason why you got this big push right here. That big push was everybody thinking it ain't gonna hold, and they pushed it back up. So when they pushed it back up, they then slammed it. So when they slammed it, it was gonna probably come back down here and continue on. The sideways price action chopped up all the longs and got the shorts to be greedy. So they tried to push it back down to support. But again, that support was a heavy support. You're talking about a support that it held 5 times with volume. So that's what caused the massive move, because now everyone is trapped. Remember, they got in here, because you got to think about it from pre-market. It's all fundamentally finding the key areas. So you had this big ramp up, and then you had them tested again here. They got in heavy, pulled it down, couldn't do it, pulled it back up, boom, 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 shook it back down. So when they pulled it back down here, this gave shorts, look at this long bar, this gave shorts the idea that this is going higher. This is going to keep going lower. If it does rip back up, I'm protected. So what was the top? The top of this was about a 53-cent move. So you figure if you got stop losses every 10, 20, maybe 30 cent, these are areas where it pulled. So this is a key area. This was what created the key area. So this was the swing low, swing high. So once it swung back down, did this sideways price action, this was a trap. This got everybody excited on the short side. They went, slammed very hard, and then it bounced back. This bounce back was basically a sign that, hey, we're going the other way. Yeah, you thought we were going down, but we're actually going the other way. So stubborn shorts didn't get out. They thinking, okay, it's going to bounce, bounce. Now think about this. You got to think about this visually. So you just had bounce. Now this bounce is giving you this. This is what the traders saw. They saw the bounce, the bounce, the bounce, swing down, bounce. So when it happened, this right here is what made everybody going long get involved. Okay? So these are the people who got in, it wicked down, did this move, and then it kept going up, right? So when it came back up, it made it another move here. This is when everybody got confident. So you got two types of traders. So let's go over that. You got this first trader that's going to get in here, because he's playing it off support. Right? Remember, this was support. I mean, this was your risk. This was support. This was entry. So when I got in here, I'm anticipating it already broke this area. So when it broke the area, I'm looking at this as being my risk. So it came up, swung down, which got more people excited, but then it held. So then when it went back up, shorts took over here, and then it went ahead. Now this is where people got a little nervous, the shorts, because they're thinking, okay, we're going to swing this a little, we're going to swing this again. So why is that? Let's look at the swing. So in their mind, oh, we good, because this is really a longer extension, right? We good. You see it? So this is how you have to think about where everybody's at. We got everybody that was sitting in right here. Swung it down, boom, 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 boom. You got this another little peak. So you got people who got in here that had got in here and re-shorted, and then you had people to get in here that didn't take profit. So you got some people that took some profit, and then you got some that loaded in extra right here. So because they loaded in extra right here, when it came back up to here and it wicked out, we're gonna bring it back down. That's why you had this big large red candle. It ultimately almost engulfed this one off this pull. And then as soon as it pulled back and it got ahead of it, oh man, that's when it ripped. And then you got to think about those people on the short side. They're thinking crap, 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 crap. You know what I'm saying? Crap, 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 crap. And this is the reason why you got this massive green candle. That's just a straight shot move. The last extension was here. So when it hit it, that's when I said, okay, cool, let's take most of it off. So I'm already up $1.50 something or whatever per share with a nice bit of size because I got in so small. I only had a 20-cent risk. So to give you in perspective, let's say you got 5,000 shares. Okay, it's $1,000 risk from here to here. Let's say you got a smaller account. Let's say you only have 500 shares. 500 shares. It's $100 risk. So ultimately, when you get that massive move, this is what's happening. This is what all these people got cut. All these people got cut. I mean, honestly, if you want to go back, some of these people got cut. But because they were in position, many of them probably came from this day. I believe that most of these people on this move, because these people were able to still massively short. So my ideal is that this stock will continue to do what it do and then come back and do it again from that point. So it'll go up, come back, they pulled it back down and bring it again. Now, what was that pull down? Well, let's talk about it. When I looked at that stock, I saw this. I had a nice pull up into a zone. They pulled it back. It held, rejected. They pushed it back up. But let's look at the area. Now, from here to here, nice move, 6.5%. That's about average. From here to here, not so massive a move, 0.55 or 9 cents. So you just came off of a huge move, pull back, and then you try to ramp it again, and then they pulled it right back to the place it was at. Again, the igniting candles happen on both sides. So when I look at this stock, I'm thinking to myself, okay, I had this massive move. You reject it. Then I had this massive move, and that was the igniting candle for the downside. When I saw that, I took the rest off. I started taking some shares off. And the way I scale out is I'll take a big bulk of my shares out of the position, but then I'll take little shares off, 5, 10, 15 shares. You know, I might have 5 or 7,000 shares, and I'll take very key areas to take shares off and put shares on. But ultimately, I didn't put anything on this one because it didn't do a full swing for me. So I was mainly just chipping away as I seen the stock play. So this was the first move, the igniting move. That changed the dynamic of the stock, because now it got rejected, and then they came back up and they rejected again. Now, think about this. When you look at it on a higher time frame, let's say 15 minute, you can see the sideways price action. Go back to the 1 minute. Sideways price action. They pulled it back down, came back, retest. So this is one of those like over under moves that they talk about. The stock went under support, retested, and this is how they get longs, because this is the same move it did here. Went down, went back up, retested into the pull, did the same move right here. Get you excited thinking it's gonna go higher, but you forgot that we're in a downtrend because we had an igniting candle that switched the trend. This is how reading charts really helps. Because see, this is how the longs got chopped up right here. Because they thought, oh yeah, it's making higher lows. It's making higher lows, it's making higher swing lows. It's going to keep going. No. That's not the pattern that you're looking for, not on a downtrend. You need to have an igniting candle. So this would have been your igniting candle here, pull back with that move going higher. And then you would have joined that trend. But a lot of people got chopped up right there. That's the reason why you got this big drop. That's what happened. So when I saw that, I started immediately taking shares off because it's gone. Remember, downtrend. Right? So we had our swing lows, but we're swinging low into a downtrend. So what happens? It popped up, got everybody enticed, then they pulled it back, popped up, then they just tanked it. You see, that's why I like a lot of times you want to wait. You know, wait till you get that second green candle. Wait till you see it formulate. Just like I did here. I waited for the second green candle to confirm before I got in. Right here, if you had jumped in, lose your shirt. Now, realistically, if you know you're smart and you respect your risk would have been somewhere maybe like let's see, right here. You know, even if you had got in here. That in itself was about 30 cents. So this is how you take small paper cuts, 20, 30 cent. Cool. You got that wrong. It flushed. But to even avoid the trade altogether, you would have paid attention to the trend. The trend was switched when it got here. It switched. It's over. So they brought it down. Sideways price action. Brought it back up. Then they swung it and tried to get it up higher. But it just didn't have no more juice. Now, this was a good entry. Because once it swung down, came back. Now look at where it's supporting at. It's supporting right off of this area again. So this was your key area. So that's where you zoom back out to the 30-minute or something like that. And you will see right here was the area. So maybe we can call it 13.11, $13 area. So when you go down and look at it from the 1 minute, you can see how boom it rejected, and this is just you paying attention. So it rejected, came here, did a nice little move. They went down there to get some inventory, pulled it back up. Then they did what? Rejected. So 1, 2, 3, 4, 5 rejections in the same area, just like it did pre-market, just like it did before. Then that's when you wait for the pull up, pull back, and then take off. Boom. Here with a wrist to here. And you got your gain all the way up here. So basically it's stretched. So you would have got in here with a wrist to here. So you're talking about 5 cent. Biggest risk of 13 cent to the support. Now if you just one of those traders that wanted to break out and then come back, you could have got in here. You could have got in here and risked the support, 30 cent. It went 65, so it would have been a 2-to-1. But you know, I like those small risks. I'm looking at the chart. Yeah, probably would have played it somewhere here. 13 cents, 65 cents. It's still a 5-to-1. So the whole key of it all is getting closer as you possibly can to support, so that you can actually take advantage of the trade as it forms. But you got to be paying attention to know where support is. So again, VERU was my biggest winner. It was a really phenomenal trade. And those who I know a few people in our Discord were still holding shares in the 12s, the low 10s from Friday. So I know they did pretty well, and probably some of them still in the trade. So guys, if you have any questions, concerns, leave them in the comments. I'll be sure to try to reach out, or someone within the staff will try to reach out to you and answer those questions for you. Join us in that Discord. It's completely free, very informative information. A lot of guys in there giving information and different things like that. But for the most part, today was a indecisive day. So if you looked at the SPY, it just kind of gives you a conception of what was really going on today. And again, guys, I talked about this. I figured there were going to be a bounce, but today really lets me know that the market was indecision on low volume. Overall, this is a good sign that we're probably going to take a tank. We might bump up to the 406. I don't see it, but I do see us going down and knocking out 385. So guys, make sure you click that bell, click the subscribe button so you don't miss any of our videos. By clicking the bell, make sure you get updates when we do send out a video. And like I tell everyone in the Discord and all the traders in the community, stay studying and stay focused.